What up, guys? I hope you're all doing well. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. So look, just going to get it out of the way real quick. You know what to do. Hit that subscribe, hit the like, select all, and a friendly reminder, if you're looking for some free Bitcoin, the Coinbase link is in the description below. They give you like 10 bucks in crypto. I'm going to be bringing on a new exchange that has some really good perks for you when you sign up. And I also have the Webull link down below. They're giving on my account up to $9,600 in free stocks. I've referred a lot of people. A lot of people have gotten stocks, a lot of different stocks. They're doing Facebook, Apple, fractional shares at Amazon, and much, much more. It is a random generator. I'm not saying you'll get $9,600 in shares or you'll get Apple, but I've gotten Apple. I've gotten Facebook. I have not gotten Amazon yet. But it is, it's free shares, and you definitely will get them. And they have some cool stuff. Now, on top of that, if you decide to deposit, they'll give you more shares as well, okay? I'm also going to be bringing on a new sponsor called Moomoo, which I'm excited to do a tutorial on their platform, and I'm speaking with them right now, so I'm going to be looking into that a little bit deeper, and I will let you know, and they have some perks for you guys as well. I've heard nothing but really good things about them. So today I wanted to go through a little tutorial and things to look for on how to see if your stocks are bottoming or close to bottoming. Now remember, you never will get it to the very, you'll never sell at the very top. You can identify specific things that will let you know that you're in the range of the top, near the top. That's how I was able to tell you that the market was going to come down back in November. I was able to tell by bubbling volumes, rotating volumes. It moved from investment to prop trading. The sectors were moving too fast. There was all kinds of identifying things that were going on at the top. Now, at the bottoms, there's also things that you can identify. And, not everything will bottom or top at the same time. As you know, the first thing to go at the tops were the Russell. That started almost 9 months before the stuff started topping on the Dow, as an example. Well, sometimes those popular stocks that were way up that we had fun with in 2020 that started to fall in 2021 and got crushed in 2022, those were the first to fall, and those would probably be the first to come back. Some of those were the popular names that a lot of people love to invest in. And I put together a watch list of ones that are near bottoms, and I'm going to describe why I think so. Now, there's many things that you can look at, and you will never really know because things can change quickly. However, by identifying specific things, we can see if we're pretty close or within the range. Maybe it drops another dollar, maybe it drops another $1.50, or maybe it just goes up from here and we get lucky. But being close to the bottom is good enough, okay? Especially if you have the mindset of investing or long-term or even short-term swing trading, you definitely want to grind off the bottom, especially for that long-term, okay? Now, the first thing that you have to look at is, and it's always going to be, your indexes, okay? Because remember, red tides will sink all boats, and green tides will lift all boats, okay? So right now, none of the indexes are particularly happy, okay? Currently, the NASDAQ is down 22.59% from its highs. That's considered a bear market. You have, let me get the... Well, for this tutorial, I'm going to leave the ribbons off. Just know that this middle blue is actually the ribbon, and this middle purple is the ribbon showing the downtrend. The blue is the uptrend, the purple is the downtrend. I'm going to leave it off so I can detail out a few things here. Okay, so on the NASDAQ, we're currently in a bear market. We're down 22.59%. So we need to think of the stocks that are in the NASDAQ. They are controlled by the umbrella, which is the index, and the first thing you should look at is the NASDAQ healthy? Is it in an uptrend or a downtrend? Well, it's in a downtrend. Therefore, all red tides will sink boats, okay? But there is a time, even when the index is going down, that the stocks in it start to become less volatile. They're not swinging way up and way down. They're swinging up and down just a little bit, okay? And they're kind of probably going a little bit flat, kind of double bottoms, dragging along the bottoms. And those are ways to see or identify if stocks are slowing the descent and kind of establishing that floor where, you know, the market's not really willing to let it go beyond that price too far, okay? Same thing with the SPY, you know, top 500 companies. You're going to look at that first. You're going to find out if you're in an uptrend or a downtrend. I mean, if these are all in an uptrend, the whole market is pretty happy, essentially. If they're all in a downtrend, the whole market's pretty unhappy, essentially. So right now, the SPY is down from its all-time high, 12.93%. That's a pretty good chunk for the SPY. And if you notice right here, this actually was a very quick little pivot because of the GDP. Okay, the big GDP miss, the big GDP lie. And, you know, same thing with the Dow. Now, the Dow hasn't gone down as much as the others, I don't believe. Let's just grab that real quick. It is currently down 9.64%. And the Dow is the easiest to, oops, what did I do? Oh. The Dow is the easiest to identify because it only has 30 stocks in it. So it's always the easiest. It's also the one that typically goes down the least, and it is also a leading indicator. And when the Dow breaks, the whole market has broken, and next comes the housing market, probably the credit market, meaning they're gonna stop doing loans on houses and stuff like that, cars, and then full-blown recession, you're already in it, and then the Dow will be the first to lead you out. So it's the last to fall, and when the Dow breaks, you know it's trouble. You know you're in trouble. And then when the Dow starts to come back up, that's about 6 months ahead of everything starting to come back. It's a leading indicator. So it's currently down 9.64%, okay? And our Russell, let's just take a look, for the small caps, is down, oh, it even came past. Okay, this Russell's been going down for a long time, 23.35%. And Bitcoin, I consider the Dow of crypto, so let's just take a look at Bitcoin, where it's at right now. We're going to talk a little bit about all this stuff. 44.53% from its all-time high, okay? Now, I have located some stocks. They are popular stocks. They are the ones that we made a lot of money in years ago. And remember, there's 4 market phases. The first phase is called the accumulation phase, okay? Every single stock chart and every single crypto chart has this phase, okay? And for this very part, I'll put the ribbons on so we can just grab a couple different stocks and even cryptos and just see the difference there. So this is Bitcoin. So as you can see right here, you had a big sell-off. You had the purple ribbon, okay? And it finally bottomed right here, and it came back. Your HMA did flash blue, but you're not out of the woods. You want to get the blue ribbon, which happened here, and above the 200, which happened here. So when you get all 3 conditions, that means that you are out of phase 4, which is the devastating one that we're in currently in stocks and crypto, and you have now entered phase 1, the accumulation phase. That is where large institutions, funds, whales, that's where they accumulate their shares. You want to buy low, sell high, and you want to think of it in cycles, okay? So right here, you got your blue HMA, you have your blue ribbon, which is showing trend, okay? And you have come above the 200, and the ultimate sign for a true reversal is when you go from the peak of the top and you actually break out from it, okay? So that would be right at this moment is the safest spot. But a lot of people will get in right above the 200 and make a little bit more money and just go through it. But the safest spot is to take the previous peak, let it go through phase 4, get all your conditions for phase 1. I like to buy right here, but certainly safer and off to the races when you past this, okay? So if you were to identify that and start here, and you went to the top, so you went phase 4, phase 1. This is where phase 2 starts. This is called the participation phase. Okay, participation phase goes up, and this is where phase 3 starts. It's called distribution, the distribution phase, okay? And it is identified by many things, okay? But one is these big, violent, bubbling kind of tops, and then its first lower high, okay? And that tends to be where people go short. And if you notice, your HMA flashed red on the daily, as well as your ribbons are very tight, looking like they're about to go purple, and they did basically the next day. So you have phase 4, phase 1, phase 2, phase 3, phase 4. Phase 1, phase 2, phase 3, phase 4. Okay, phase 4 is going sideways. We're not out of the woods. So what you need to see on Bitcoin is for this to come down and bottom, and the HMA will actually, it'll still be down here, but the HMA will turn blue like this one. See how this one turned blue? That means a reversal. We're changing directions. The ribbons will come up, the purple 200 will flatten, and the price action will be going up, creating this kind of cup, and this will be coming down. The price action will cross over, and you're moving from phase 4 to phase 1. You're doing this again. They all go in the 4 market phases they have from the beginning of time. There's the top, there's phase 4, there's the cup, there's all your conditions, there's phase 1, back to phase 2, phase 3, and it just repeats over and over and over, and has for since the beginning of the stock market and the beginning of the crypto market. Now, these need to go through the time frame that it takes. So if you have a brand new crypto that was released last week, obviously it hasn't had enough time to go through all 4 phases, but it will. And there's not a chart out there that's been through a full cycle that does not have these 4. So if you identify where you're at in the cycle and the process of each phase, that is step 1. Okay. So Bitcoin is kind of, in my mind, it is the Dow. It is an index of crypto, and all the alts are under it. So when the Dow of crypto, Bitcoin, is happy, then you know the altcoins will be happy. Yes, there will be sporadic jumps in altcoins, even when Bitcoin is unhappy, and that's because they have different protocols. And that's the same for stocks too. There will be stuff where the SPY is going down, and some stuff in the SPY will be going up. Those are leaders, or they're just in the right sector. And a lot of things have been showing bullish behavior, even though the whole macro trend is down. Some specific stocks have been going up in specific sectors, such as commodities and energy and oil and things of that nature. So now you're identifying, you know, are you in an uptrend, a downtrend? What phase are you in? And then you need to start looking at your sectors, right? So I put together this list here, and if you notice, just about everything is red in the list. And I have them color-coded different, but they are close to bottoms from what I can tell technically. So just looking at the daily, we'll start here with Root. Okay. Now, Root had an all-time high of $29.49, and it's currently at $1.93. Okay, we're talking about a 1,500% loss, okay? So at some point, this thing has been living in phase 4 since the beginning. Whatever this company is, I don't know what it is. Finance, insurance, broker services. I'm just looking at the technicals. I do not know the company very well, but I do know the technicals. And I can tell you that phase 4 has been savage for anybody that was ever invested in this. Now, the coding on my system, on my technical charts here, is extremely detailed, okay? Let me just give you just a little tidbit of everything that is being calculated behind the scenes on here that we cannot see. So you just see the trend. You see this blue, red. You see the 200. You see the EMAs. You see, I have color coded. We have some indicators here. Well, actually, all of these indicators are built in to these little green arrows and these red arrows. Okay, they're all coded in. So this thing is showing EMA trend, which is very important, and it's doing that off of the 100 trending up or down. It's got an EMA pressure, the faster moving average against the slower moving average, super trend direction, super trend reversal when a direction changes, parabolic SAR reversals, HMA trend direction, up or down on the 100, HMA pivots, HMA when it reaches peaks and valleys. I want to talk to you about that and how to identify the difference between the volatility. RSI divergence, RSI level, oversold or overbought, okay? RSI crossing the 50 line, MACD divergence, MACD histogram pivot, reversing from a peak or a valley, MACD cross signal, wave trend divergence, wave trend cross signal, that's the fast wave trend crossing above or below the slow wave trend, stochastic divergence, stochastic cross signal, Bollinger Bands, which is basically deviations that a lot of swing traders use. This is price crosses above then below the upper Bollinger Band or vice versa, the lower Bollinger Band. ATR reversal, average true range changing directions, RVI position, low or high, RVI divergence, supports and resistances. Even if you didn't draw in supports and resistances, my indicators and coding already know the major levels of supports and resistances. It's all built in. This thing also has OBV divergence, price moving in opposite direction of volume flow. It calculates the MFI, the money flow index. It has a calculation for CMF, cross 50 line Chalkin money flow, okay? And it also rates the Chalkin money flow level if it's high or low in a flow state. It also has VWAP cross the HMA and VWAP crossing above or below the 100 HMA, okay? It also can recognize engulfing candles, and it also recognizes VWAP trend importance, okay? So I just wanted to go through how technical all this coding is and how detailed it is. The way I have it set, and again, you get all the coding and you get all the indicators and full lessons on every single thing, plus all the settings, which are completely customized, and how to identify the highest probability of of success going in the direction that you want to go. It's all in there, okay? It's very worth it. And you get it all in the courses when you become a Jedi, okay? So if you want to do that, the description is in the link below, and you would go into the Discord, you verify with your email, phone number, you come in, you go to start here, you can pay $99 a month for the monthly and you get everything, or you could pay a one-time for the annual, which is $665, but that is actually ending April, and it's starting to go back to the $900 or whatever it used to be for May. So that's well worth it. And you get the one-on-one coaching with me, 10 hours of that. You get the Wheelhouse Wednesdays, which is group training, plus all the previous ones you can watch at your own leisure. You get all the courses, which are amazing, and more are going in there. You get full access to the entire Discord with all other people learning and working towards their training as well. And then, of course, you get all the alerts, which is cool. So, all right, so we look at our indexes, and we see if they're happy or not. And we look at our sectors, and we pay attention to the news. Why? Maybe the news will show up in the charts, okay? You can watch the news all you want, you can listen to people all you want, but it will show up in the charts. It'll show up in the volume, it'll show up in the trend, it'll show up in the momentum, it'll show up in the sector. These things will show in the technicals, okay? Typically, a lot of that is usually based on fundamentals. We're just currently not in a fundamentals market, but I will tell you with 100% guarantee through experience that eventually the fundamentals will prevail. So understanding stocks that you want or cryptos you want, where it's at in the process, and trying to get as low to the bottom as possible for those high conviction plays so you're getting the best value. Very important to kind of understand, where you're at, especially when you're in a downtrend, okay? Remember, a lot of the small caps, they got wrecked way before the other ones. So they were first one to come into phase 4. A lot of the big ones that we know that hold up the indexes just got into phase 4 recently, but these other ones have been in phase 4 for almost a year. So they're due to be coming out. So like this one, Root, I don't know what it is, but every single one of these triangles, it has to do with a calculation with all those things I just read. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, and your HMA right there in the middle is a reversal, and it's starting to curl up. And if you notice, your ribbons everything is starting to go sideways, and so is your 200, okay? Now, those are identifying conditions to showing that you're close to a bottom. When you finally come down, and when this blue line gets above the blue line on this side, which it's about to, okay, when you're in a downtrend and this thing goes blue, a lot of times you don't necessarily want to buy it because you're in an overall downtrend, okay? You may cover your short, or you may follow the ribbon and keep going down. That's up to you. But essentially, to identify a bottom, which is the topic here, you wait for the thing to go blue, and then you can draw a line across, and only when this thing comes above it, even though it's below the 200, it's creating a bottoming process. And because you have, 1, 2, 3, 4, 5, 6, 7, 8, 9 buy signals saying that, there's a good chance. Now look, this is basically, the blue line is the relative strength index, and the pink line is the S&P. When it shoots through the S&P like that, it is outperforming. You want to buy things that are outperforming, and that is a sign that we have it's a leading indicator, basically, a leading stock. Your stochastic, low and cross at the same time, your vortex crossing, your dynamic trend crossing and going green. You have every single one of them confirming, plus the volume, all these going, and you're about to cross. Root, even though it's down 1,500%, well, it could go up 1,500% in the same amount of time. Now, let's calculate time. So from here, which was October 28th, 2020, to current, which is, so that'd be a year, and 5 plus 8, a year and 8 months. So it's been 20 months. It has been 20 months of down. So when you finally get to this bottoming area, what usually happens is it's going to make its little process. It's going to come up. It's going to flatten out, and eventually it's going to come into phase 1. Okay, I'll just give you a little drawing of what that might look like. So maybe it does something like this. Okay. And it seems a little frustrating at first. You're like, man, this thing is kind of taking forever. What's going on? Well, what's going on is it's making a process. So this is coming around, and then they cross, and that's the moment when you come out of phase 4 and into phase 1. Okay. Now, let's go look at some other ones now that I've kind of broken down some of the identifying conditions that you would be looking for to see if you're getting a good deal technically. Now, obviously, you want to mix in some fundamentals. You don't want to just be buying, I don't know anything about this company, Root, as far as, how they're doing on their earnings per share, their annual revenue, their month over month, and year over year. I don't know their pre-tax margin. I don't know their sales revenue and growth, but I can see technically that it looks like it's bottoming, okay? That's not one that I want in my portfolio long term because I just don't know enough about it. But, I was going through a lot of charts, and this one ended up in there. Another one that I'm seeing is Snapchat, which a lot of you might be more interested in. Now, why Snapchat? Okay, first, let's go see if there was those 4 market phases I was talking about before. Okay, well, here's one. Here's one. Okay, came all the way down. Out of phase 4, there's your blue HMA, blue ribbon above the 200, and that went all the way to here, okay? And then that's your distribution phase, okay? So we'll just start here. And your distribution phase goes out of phase 3 into phase 4. Devastating, okay? This is your pandemic, okay? They all came down, and look, this thing flashed a buy on the day of the very bottom. All right. Comes up, you get your blue HMA, you wait a little longer, there's your blue ribbon, and a little longer, you're above the 200, and you start right here. And you come out of phase 4, that's your safety spot, okay, and you come all the way up, phase 4, phase 1, phase 2, phase 3, and back to phase 4. And again, they're all going to do this. So they're all going to have their high, and then their first lower high, and then right after, that's going to go red, so is your ribbon, and it's going to become devastating back to phase 4. Okay, so as you can see, these things make mountains, and they all do the same thing. Now, this one, Snapchat, to me, there's a difference between Root and this one. To me, this thing is still coming down at a pretty sharp angle, Okay. Also, the direction of the ribbon is pretty significant. It's still coming down a lot. Now, I do see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 touches on this particular number of 28.27. So we're within 20 cents of that. We're within 19 cents of this place that it's touched that many times on Snap. That is positive. So, but your red is HMA, everything is still bearish. So we're going to see if it bounces, and if it does, it'll start to bend the blue, it'll start to bend the ribbons, it'll start to slow this down. We'll see if this thing comes up and then comes down, and by doing that, when the pressure goes up on the price action, it starts to slow this down to flattening and slow the ribbons down to flattening. So it might come all the way up, and it might even go a little higher than this peak right here. And that's what's called a swing high, if you're in this stock looking at it. So it could come up, it could go like here, and then it might come down and not as far as this and start making its way, and eventually this will flatten out and this price action will change and it'll come out of phase 4 into phase 1. Okay, so these are just identifying ways, pattern recognition to look at. Let's look at NEO. Now, NEO, okay, peak. Okay, I'll just draw it for you so we can kind of get into a repetitive nature here. Okay, there's your peak of the base. Okay, there's your blue HMA, there's your blue ribbon, and above the 200, and you would buy right there. Okay, you would buy right there, and you would take it all the way to the top. Okay, going from $3.77 all the way to $66.56. And when you notice your first, lower high, which is actually right there. So this lower high never moved anywhere and then fell off a cliff. Look, your red HMA, it went red, your HMA. And there goes the price action. Okay, chop, but lower high, chop, lower high, chop, higher low, got a little higher, gave people inspiration, and look at the indicators picking up on it, and then boom, okay, fails. It fails below the 200. Remember, below the 200 bearish, above the 200 bullish, okay? It comes up, HMA, best friend, I swear. This HMA is so smart. It goes blue, and look, boom, catches the whole rally, tells you to get out right there before it even starts going down. Gives you a second warning, and then a third warning here, okay? It's red, but above the 200, so considered still in an uptrend because you're above the 200. But when it falls below, it's bad. So here we go. Double buy signal, HMA goes blue, and you catch a rally. It tells you to sell right there before it gets devastated. You come all the way down, okay? Multiple buy signals. Boom, boom, boom. Big rally. It tells you to sell right here. Okay, why? Because it went above and got rejected off the swing high. Remember, it calculates reports and resistances of pivot highs and lows. It comes down. Your HMA is red, okay? Your HMA goes red, but you have multiple touches. So you always want to pay attention to this kind of stuff in technicals. Okay, we have multiple touches, and the brunt of the steepening has already happened. Okay, this thing is like, essentially kind of doing this double bottom, and we're going to see if it kind of starts, the volatility slows. Notice how these are reversals. So if you notice how this comes way up and then reversal, and then way down and reversal and up and reversal and down, reversal and up, reversal and down. Okay? But it's not a reversal until it passes, remember what I taught you, until it passes the HMA. Okay? It's not a full-blown reversal. So what I'm seeing here is we might be entering in to a range, which some, and myself included, call it a box of confluence, okay? And this may be that bottom range for NEO, okay? I am identifying certain things, technically, taking everything I've told you into consideration. Now, it will start to fire off little green triangles, but we've identified we might be in a range. Now, if it goes a little further, like back down to here, that might be a secondary range. If it cuts the lows, all bets are off and it's removed from the list, right? Okay. But right now, we possibly are in this little range, And our first ladder step up would be to break these pivot lows, okay? But that one's not that necessary right now, so we don't need that to confuse us, all right? And we don't even need this one right now either. And we don't need any of this stuff on the chart right now. Okay, let's look at the next one. Now, Crocs. I made a ton of money on Crocs. You can see all my my stop loss points all the way up. This thing just paid, okay? Paid. And, you know, we can learn about secondary trends in the primary trend, and we can look at minor trends, and we can look at, you know, stops and classic stops using the ATR, and I teach you all that in the courses. But essentially, here you go, out of phase one, there's your peak, okay? Remember, it's on every chart, okay? There's your peak. There's your distribution phase, phase 3, phase 4, blue HMA, blue ribbon, above the 200, and you are now in the accumulation phase, okay? The accumulation phase on this one was a monster. In fact, I even know the percentage. It was 550%. Yeah, because if you know how to identify this stuff, these are the kind of numbers you can make, okay? And just as important to know when there's a top, like I showed you in November, it's also good to understand when there's a bottom so you can, you know, achieve the whole 550%, all right? Now, you don't know which ones are going to do that, but the earnings usually will be a huge guide for that, and the technicals will follow. Okay, now, here's a different one that I want to show you. Okay, this thing came up. Okay, first you had your lower high right there, okay? So, boom, lower high. And by the way, this was another identifying thing that I would have picked up on. You make a higher high, and then it touched 3 times and then made a lower high. Anytime there's 3 wicks above a pivot high, and it usually will fail if the body doesn't close above it and get rejected. And anytime there's 3 wicks below a support, but the body closes above, it'll reverse back to the upside. Okay, and this is all stuff I teach you in your courses more in depth. But it goes red. There's your red cloud. Finally, a red ribbon under the 200, devastating, and multiple buys coming in, and then it went blue. Okay, it came up. When it comes up, it pushes this up. It slows down the 200 trend. Comes down, but not that far. Goes up a little bit more. Comes down, up, down, and it's kind of established this basis for a floor over in here. Okay. Okay. Now, see, da-da-da-da-dum, da-dum, da-da-dum, a little bit below, but those are wicks, not bodies. Okay, let's just look, make sure I'm telling you right. Yeah, look, wick, 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 bodies are above. That signifies a reversal to the upside. What else does? A blue doji signifies a reversal to the upside. Volume coming in. Everything looking good on indicators, earnings coming, and look at your HMA. It's flat. That means it's under accumulation. That means that they're buying, they're not really selling. Buying a little more, not really selling. Okay, this is just retail getting out, panic selling, whatever. I can't take it. I want to hold my Apple, get rid of my Crocs, this kind of stuff. A little bit more accumulation. Okay, volume is up, price action's holding. It shows that people are holding it. Okay, it comes down. It's got that retest. You got the doji. It looks to me like it's flattening, and we're going to get one of these, which is going to slow this down, and notice how these are starting to go sideways, and it's going through its process. You want to identify, if you can identify where the middle of the phase 4 is, then, and you can get it down to the day of the middle, that is the lowest day price that you're going to get coming into the next four phases or cycle. If you can get it down to the 4 hour or the 1 hour, which I can teach you in the courses, then you're even better. So if this is making an HMA, you've established this floor, you're going sideways here, this is slowing down, you're walking yourself into an earnings. It was one of the biggest leaders of last year. You have a doji. This thing, when you get to the earnings, might be the middle point and the first sign of phase 4 ending and phase 1 beginning. So up, down, you know, this will come down, and finally the price action, the ribbon will go blue, and boom, 550%. Okay, sun run, same thing. Reversal, big down, touch, double bottom, double doji, coming into earnings. Indicators are showing we're about to go up, And Sunrun used to be way up here at $100 and it's $20 right now. That is a 400% return, guys. 400% from here to here. And typically the way these things work, just to kind of give you an idea, is they work like this. Okay? It takes this many months to come down 400%, and it takes this many months to go up 400%. Typically, yes, there will be all this weird stuff in between. I'm just showing you layman's terms, okay? Sunrun, looks like it's bottoming to me. Facebook, let's look at Facebook. Okay, Facebook had an outstanding run, got wrecked on earnings. They really, really failed on the earnings. Let me just draw some stuff in here. You gotta get a bearing. Okay, so Facebook hit here, came a little below, but immediately rose up to look like a double bottom. Plenty of momentum. I mean, outperformance. Everything on Facebook says that it's ready to go up from this point. That except, I mean, the 200 is really coming down still. I mean, your ribbons are low, but this is one of those things that I haven't gone over that I want to go over really quick. When stocks get decimated, like CRM, okay, or PayPal or Facebook, it's different than the ones like NEO that just go down, deflate over like a year. When they go down, pretty much most of the down part in 1-2 days, and then they kind of go down for like another month, and then they start doing this. The faster they go down and get it out of the way, the faster that they're ready to come back up, especially if they're backed by a good earnings. That's another one we could look at. Facebook. Open Door. I just found this one. This one also looks like a bottoming process to me. Again, you have all these touches, okay, and you have the HMA flattening, and you're kind of double bottoming. It might grind a little bit. It's okay. It might grind. Remember, the bottom, you're not going to hit the perfect top, and you're not going to hit the perfect bottom, but you want to be in that zone of the top to sell and the bottom to buy. And this is the zone of this particular stock that's called Open Door, okay? So I'm just trying to show you guys ways to identify where you're at in the process. If you know where you're at in the process, you can have a plan. Remember, if you don't have a plan, your plan is to fail. And you need to have a system, okay? In my courses and just my mentoring, I always teach about a plan and a system, okay? I'm always prepared for things. The next one I want to show you, I just put on this list, is called JCI. Now, JCI is also showing those similar traits. Okay, it's kind of got its double bottom. It hasn't really been in a downtrend for a long time, but then again, it wasn't in a downtrend very long over here. Just to kind of show you, there's your peak from before, okay? And phase 3, phase 4, there's a blue HMA, there's a blue ribbon, there's above the 200, and if you would have, knew where you were at in the process, this thing went up from $35 all the way to $81.59, okay? Almost 300%. It's like 275%. And what do you see? Well, not only do you get the technical buy signals, or sell signals, excuse me, you get your first lower high. And once you identify that lower high, and then this goes red with the confirmation, you just got to get out. You got to be non-emotional. It doesn't matter how much you love whatever stock it is. This is Johnson Controls, but it could be Microsoft for all it matters. So lower high, sell signals, HMA goes red, multiple buy signals, a flattening, double bottom technically, back in a range, box of confluence, you're in the zone. Okay, you're in the buy zone. All right. There it is. Now this thing could break, and then we need to flip this box down, and we'll look at it again and take it off the list. But for now, that's what it looks like. Hood, another one. It actually started saying to buy over in here. It really was flashing buys in here, more here, more here. So it's boom, boom, boom. That's a dragging process. This is a dragging process. When you see these things doing this, they can't, they just, there's really a low of $9 and there's really a high of $15, and the range is, I mean, that's a high range. It doesn't have to be that high. It can be more like this. Okay, so $13.93. So, I mean, you're looking at a $4 range. You're in the buy zone. Okay, you're in the buy zone. Okay, obviously, if the top of the buy zone is $13.93, just call it 14 bucks, and the bottom is 9, you want to be closer to the 9, and we're at 9.81. Might not be going down much further than that. So just, you know, I'm not saying it won't, because you never really know, and I don't. And one of the things that I need to see is a green triangle and the HMA actually be red. So this one I'd be waiting on just a little longer. Okay, this is Zoom info. Again, buy signals, flattening HMA. And remember, if the HMA goes above the HMA here, which it's close, okay, if it actually goes above this level, okay, which it's right below it, and there's the buy signal, and it's curving, this thing could be at the bottom. Zoom. DraftKings. Okay, let's look at DraftKings. Now, DraftKings has just been decimated. Okay, touch, fell below, back up a couple levels, fell back below. So this one's pretty powerful. Above, touch, fail, fail, and now if I bring it forward a little bit so we can see a little more clearly, we're right below the line, but we have a blue doji volume. Everything is starting to point the right way here, coming into earnings. These mountains are made the same way every time. I will just keep repeating that. There's your distribution phase 3. There's phase 4. There's your blue HMA. There's your blue ribbon. And your 200 started where the base is. And if you would have done that, you would have made a tremendous amount of money. 300%. And it's come all the way back down 300%. And at some point, it has to find value where people come in and stabilize it, which means that the volatility will slow. It'll start to make its range, its zone, its box of confluence. And remember, these were some of the first ones to go. Therefore, their mountain, their phase 1, 2, 3, 4 is further along, and it will probably be some of the first ones to be coming up again. So DraftKings looks good. Another one that made this list is Pinterest. Pinterest, no, it's not perfect, but it's we need to see. It did just get the buy signal, though. I do see things on Pinterest that show me it could come down a little further. Here's one I thought was interesting, was Home Depot. Home Depot is not only a really good company fundamentally, and it's not going to go bankrupt. Look at that. How many buy signals is that, guys? 1, 2, 3. 3 buy signals. Okay, 1 sell signal, 3 buy signals, but the buy signal came after the sell. So this thing right here looks like it's going sideways, and the more sideways it goes, there's going to be a bigger move. Okay, that's number 1. Number 2, the longer it goes sideways, the more this flattens and the more this goes sideways to create a phase 1 out of phase 4. Okay, so Home Depot, something to look at. CRISPR. CRISPR somehow made it on the list as well. CRISPR is in this massive descending pattern. But look, the HMA, so it kind of bottomed. Okay, so it kind of bottomed and the volatility is shifting on CRISPR, I've noticed. And I'll just make that yellow so it just kind of stands out a little bit for us. Okay, so boom, 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 boom. Okay, so we're gonna see where we go. But I mean, CRISPR at some point was up in the 200s, right? Got $218, and right now it's 49. Yeah, so I mean, CRISPR, you know, it's come down a long ways, and it could go back up a long ways. And you know, the technicals show we're getting close. The pattern also shows so. And look, this thing is flattening, so it needs a peak above this little area right here to kind of really push this thing into a flattening cycle, so that phase 4 finds its halfway point, which I think we're getting close to. Upstart, another popular one. Upstart, I mean, overall bearish, but again, establishing a floor and building a zone. Okay, that zone is less volatility. Volatility looks like this. Okay, this is volatility. When it comes way up, obviously, if you were long, that was good. Way down, obviously, if you're short, that's really good. Up, down, that's lower volatility. and establishing a zone. That means less people selling, some people buying. It's kind of stabilizing, okay? Legal Zoom is another one I see bottoming. Same thing, okay? I'm just going to go a little faster now. Lucid. Okay, Lucid is not quite there, but I think that we're in a very low zone. I think this thing could go anywhere from $16 to $19. That's your window. PayPal, actually. PayPal's kind of doing the same thing. A lot of establishment over in here. It's got to creep back above this, which is like a reverse breakout, which it's trying to do. If it rejects here and comes down, then this one gets removed. But it's definitely something we want to keep an eye on because the way this is shaping up, it looks like the middle could be like over in here. So we want to kind of keep an eye on that. But all your indicators are saying this thing is about to go up. Why is that? Oh, I was like, what is that? It has an arrow. I've never seen that. It's actually just the triangle and the volume. Okay, Roblox. Roblox, again, is this thing going to kind of go sideways? I don't know. I put it on here just to monitor it for us. Square. Okay, Square is actually making a higher low. Okay, but establish, higher low, doji, that usually signifies that we're going to make our way up further and continue to go up. We'll figure out the angle as we go. Peloton, so low right now. I mean, this thing was, I don't remember, it's way up there. $171 and it's 17 bucks. I mean, that's a 10x. That is sick. So if it's a 10x and you could take 100 grand and turn it to $1 million with patience and just understanding the bottoms here, well, what we want to do is first you got to see their fundamentals and the sector they're in, and are they going to get acquired? Like, what's going on with their business before you can just throw 100 grand on Peloton? But there's money to be made if you can establish the bottom. Now this thing looks like it's still kind of bleeding down a little bit, but the volatility is slowing. Okay, here's another one. Edit. Now I think Edit is getting really close to being at the middle. I think the earnings right here is literally going to be the middle. Establish bottom, and grind. That really looks like you're at that bottom range right now. Unity, same thing. Here's your buy zone right here from 73 to 65. 73 to 65, you're in the zone. Okay, DocuSign, still waiting to find out, but it looks like it's getting there. SoFi, okay, SoFi looks like you're in the zone. The zone on this would be 777 to $6. Okay, you're in the zone and you're on the lower side of it. Playboy, okay, Playboy is still showing that it's coming down actually, but I want to put it in the list because I know that price is getting really low, and it used to be, I mean, it had an all-time high of 62.87, so that's what, 600%? It's crazy. Lemonade, I put Lemonade in the list today. Lemonade actually could be showing signs of slowing its volatility, creating a range, and I would say your buy range on this would be $30 on the high side, down to $16.57 on the low side, and you're at $20.86, which is on the lower side of that. So I think you're in the buy zone on Lemonade. Skills, I don't know much about this. I remember a lot of people talking about it, but I can tell you right now, this one, Skills, looks like it is bottoming. In fact, you even got a buy triangle, a flat HMA. You're already in the flattening middle part. This may be the lowest that you ever get this thing, Skills. Once it makes its first blue candle, it may just start trending up for years. That's now, again, that'll have to do with fundamentals and the index as well, and the overall macros. Okay, Beyond Meat. Multiple buy signals way back here, actually. Flashed a blue HMA, kind of double bottom, just got another buy signal and double doji. So I think your buy range is right here, 47.42 all the way down to 32.22. So about a $10 range, and you're in the zone right now for the buy. Now, this thing, I mean, Beyond Meat has had an all-time high, guys, of $220, and you're at $36 right now. These are longer-term plays, but establishing the bottom is the buy low, sell high mentality, and that's how, you put 100 grand in each one of these things, and they average 400%. Okay, and you got 10 of them. Okay, so that might be a little expensive for people, but 4 million can turn into, 12 million if it's 300%, 16 million if it's 400%, kind of thing. 20 million if it's 500%. But you can do that on good companies that will not go bankrupt, and buying in that low zone and having patience. And when I mean patience, I mean patience. Now this one looks really, really good. This is the price I originally got it on before it shot to like $100. Affirm. I think Affirm is in the buy zone. Multiple buys flashing. HMA is blue and holding. Kind of a double bottom, but a higher low. And a doji. I really think Affirm is at the buy point. Okay, Monday. Monday is another one that I saw in here, and I think Monday is in the zone. Monday is, God, this thing was, it used to be like, what, $400 or something? Hold on. Yeah, $447, guys, and this is $129. That's a 3X right there. You're in the buy zone, and it's consolidating. That means that people are not selling off super hard. They're also not buying, and the ones that sell are matched with buyers. It's creating sideways consolidation and multiple dojis. People are holding now. People are buying, nibbling, and people are not selling off hard. This is the zone, guys. Okay, so that's what I wanted to show you today. I wanted to kind of give you a lesson on how to identify bottoms, spot the zone, what conditions you have to follow and look at. And, you know, I gave you one of these back in November before the whole market crashed of how I saw all these things topping way before anybody on YouTube or on TV or all these pros, like none of them knew. And I was calling it, like saying this exact same video, but at the top. And now I'm kind of showing you at the bottom. Now, obviously the list is not very long, but as the market conditions change, like for instance, if the rate of inflation decreases or slows, that's going to get more people to nibble, okay? Once you have more certainty with the balance sheet runoff and you know, the rate hike increases and the war and the COVID and the supply chain and the food crisis. Once you get certainty on any little level, more people are going to come in, okay? But it's going to be a process. So, yeah, I hope you guys learned some stuff. And the next video that I'm doing is going to be a very cool video. I'm going to be teaching you about the bull trap. Who, why, how, when, and what you need to know to identify it, to create one if you wanted, and how to play it to your advantage, okay? And it's going to be a very, very good video. I think a lot of people look at the bull trap as like this bad thing where, oh man, should I buy? And then they buy and it goes up and it falls. I'm going to tell you why it falls, and I'm going to tell you how to navigate that and use it to your advantage, and you're going to start having a perspective and thinking about the bull trap in a different way, okay? I'm going to teach you the way the whales do it, the institutions do it, and the smart money do it. So I hope you like this video. Please like it, make a comment. I appreciate you watching to the end. My name is Chris, and welcome to the Wheelhouse.